few things about trading, what you need to know, everything that you need to know about trading. So I let me just make a promise that by next week we're going to complete this course. By next week we're going to complete. We have not talked about SOW and SOS. We have not talked about volume, momentum, and trend analysis, but that will be next week. But today, although I don't want to conduct a class today, but I just want to say a few things. That's why uh, I just decided to let you guys know that I'm having a class today. So today, I just want to say a few things. So what did I want to say about your trading life? About your trading life, you know, when it comes to trading, there's no how you can do it. There's no how you can escape loss in trading. There's no how. When it comes to trading, you will experience loss. You will experience loss. I think today I make maybe almost $1,000. I've not counted it yet, but I'll check it. I make almost $1,000. I started trading since 2 p.m. So, and this trade is all about trading like waiting for the right opportunity, checking the chart. I didn't open trade from that time, but I study the chart, look at the chart pattern, look at everything. So what I'm saying is that if you want to trade, make sure you plan before you open any trade. Don't trade if you don't plan, because those who fail to plan will always plan to fail. Because by the time you open a trade and you don't know what you do, or maybe you just open your trade, you just open the chart and you want to start trading, though let me tell you, it will not come in an easy way like that. So if you want to start trading immediately, you should plan. You should plan your trade. Plan your trade. Don't trade anyhow. I have my own rules in trading. That if this trade doesn't give me what I want, I'm not going to take this trade. I have my own rules. So I just want to let you guys know that if you are trading, you must have your own rules. You cannot depend on my rules. You cannot depend on someone else's rules, but you must have your own rules. I took some trade today, just now. That is why I didn't start on time. So I was taking some trade, and I took 9 trade. Out of 9 trade, I got one OTM. These are the trade here. Okay, these are the trade. Out of 9 trade, I got one TM. One thing is that the reason why I took this trade was because though I have took some trade before these trades, I have took some trade before this trade. The reason why I decided to took this trade, not that I just took the trade anyhow, not that I decided to took the trade anyhow. The reason why I took this trade was because I have already planned that this pattern is what I want to use. That if I see this pattern, I will place my trade. If I see this pattern, I'm going to place my trade. That's my plan. So if I open the chart and this is the plan I have in mind, that this is the pattern I'm looking for anytime I open the trade. If I didn't see this pattern, I'm not going to trade. I'm not going to trade. So be positive with your plans. Be positive with it. That means be strong with your plan. If you have a plan, stay with it. Don't go against it. There are so many things that might happen. Maybe by the time you saw this pattern and the market is giving you that, oh, the market has break the level. Oh, let us go with buyers. That is, although that is not what you want to do. Mine is that I want to take this trade. I want to take this trade. Once I spot this pattern, the first top and the second top. Once I spot it, I want to take the trade that, okay, this is going to give me the third move. After this first support, this is going to give me the second move. So that is why I decided that, okay, let me place the trade continuously until the market reach this level. I have already checked this level. I've checked this level. The market is consolidated here before it dropped. But I check again, I check above. I saw a single bullish candle, meaning that this is the level the buyers become weak. The buyers become weak. Sign of weakness of buyers. The sellers entered, and now there are so many players here. This is what we call the trap zone. This is a trap zone. So many players, buyers and sellers. So we call it a trap zone. So here we call it a zone because buyers try to enter but fail and the market drop. This is the last green candle before this movement. We still have some buyers trying to enter and some sellers trying to. So battle between buyers and sellers are here. So when I noticed that I didn't pay attention to this, I didn't pay attention to this level. This is where I focus on. Okay. So what I did is I noticed that this is the pattern I want to use. That's why I want to bring this topic that anytime you open a trade, always plan which pattern are you going to use. If you don't plan your trade, let me tell you, you will just be losing trade. Don't open a trade and start drawing support and resistance. Have it in mind. Let it come to your mind that this is the pattern you want to use to trade. That this is the pattern. I want to trade the pattern like seeing the bullish movement and a rising, or let me say a symmetrical triangle. Then I place my trade. If you remember the chart pattern I teach some days ago during the course. Okay, if you remember that, go and learn about this chart pattern. I say something about this chart pattern. This is a continuation pattern. The trend, the level is here, which I know the market is going to drop. Okay, so I took this trade, which when I saw this pattern, I first of all locate the highs. First drop, second drop, I draw my trend line. Then the second one, the bottom should be the support. I expect the price to give me a support like twice. That the three touches should be the resistance, while two touches should be the support. That is my plan. So which means this is what I'm expecting. I'm expecting something like this. I'm expecting something like this. This will be one, that is two touches, two, that is three touches. So I just want the price to just drop a little bit without touching this level before I go with buyers. Meaning I have gotten how many touches, how many resistance? I have gotten one, two, three resistance. So which means that that resistance has been tested 3 times. So it's going to be a weak resistance. While the support is tested twice, 1, 2. This one almost hit the level and then it didn't touch. That is what I expect here. But I just want to make sure that it's going to give me like 3 touches and 2 bottom, 3 top, 2 bottom, so that I can go with buyers because I already saw the price movement. So this pattern is a symmetrical triangle. No, yes. So what I say is that I've already planned this is how I'm going to take the trade. And the reason why I go take this trade is because I draw the trend line. I was looking at because this market has not yet formed. The price action here has not yet formed. So I start checking here. I say let me draw the support level here. I want to draw it with the wick, but I say no, let me use the body. So I draw the body. I just draw it randomly. So when I saw the price is reversing, then I saw a gap. Seeing this gap means that there's a strong selling pressure that's going to push the price to the buying pressure, to the buyer's area. Because if you check here, if you check this area, look at these rejections, and then rejection here. Upper rejection, and rejection. This tells us that there are some invisible order. There's some invisible buying order going on here. What I mean by invisible buying order is because the buyers try to push the price higher, sellers reject. They try again, sellers reject. Now sellers try to go down, buyers reject. So from this point to this point there are some invisible buying orders going on here. So immediately I spot that and I saw this gap down, meaning the sellers quickly sell off the market. That is why I took this trade with call option. Okay, that's why I took this trade with call option. So my mind, I'm following the pattern. I'm following what my mind is telling me that okay, this is what is going to happen. This is what I expect. I want to see a pattern that will work out for me. Okay, so what I'm not saying is that I took this trade because of invisible buying order buying order, though I'm not aware when the candles are forming. But according to what I'm seeing here with these rejections and this rejection, which tells me that, and the body of the candle is still a green candle, so it tells me that there are some invisible buying order going on here, which the sellers try to go down but reject them. Buyers try to go up, and now the price is going down. The price is now at that level. That means I'm going to go with buyers. That is why I decided to go with buyers on the first trade. And I'm still thinking about this area. I go with buyers. My mind is telling me that, oh, there's still a gap to this level. That is why I decided to go with buyers again on the next candle. And I draw the level, I draw the trend line. I look at it that even though this candle reversed here, should I adjust the trend line like this? Should I adjust the trend line like this? Because what I'm seeing is that this candle, after this reversal, because this Mariposa candle can reverse at any level. If a Mariposa form at any level, it can reverse even without touching the level. That is why I didn't place the line at the body of this reversal point here. I decided to place it at the wick. The reason why I placed it at the wick was because after this reversal, we still notice that the buyers still try to go up. They still want to push the price higher until they got rejection from sellers, and sellers push the price down. That is why I expect that, okay, if the price is going to continue to this trend line, let me go with buyers. So the reason why I go with buyers was because of this. Then I decided to go with buyers again. I placed call option again on the next candle, but I lost. You will notice that my prediction is almost right. My prediction here is almost right because the buyers are still trying to go up. After I placed call option, I saw a strong green candle. Buyers are still trying to go up, but unfortunately, at the last second, the candle closed as a red. This is OTC market, anything can happen. My prediction is right. That is why I want to go with buyers continuously until touch this line. But I lost the trade because sellers want to enter. So this level is still a barrier for the sellers. So that is why I lost this trade. So losing this trade doesn't mean that, okay, some trader will now say, oh, sellers entered, let me go with sellers on the next candle. I didn't do that. I still have to pay attention to this pattern, to this move. I have not delayed this line. I still left the line there. So immediately I noticed that the sellers drop to this level where I'm seeing some buyers activity, some buying order here. I'm seeing some buying order here from this week, 2 week here, and this lower week. I'm seeing some buying order why the buyers entered here. Even the market still got rejection. And sellers still tried to enter and I got a small rejection. The price still go up, which means that this zone is a strong zone for the buyers. So at any moment, the buyers can form a momentum from this zone. That is what I expect. So I didn't go with sellers because sellers enter very strongly or because I say this is a bearish engulfing. Let me go with sellers. No, I can't do that because I have to stick to my plan. If I go with buyers on the next candle and sellers enter, meaning my plan doesn't work at that moment. So I'm not going to go against my plan. My plan is to trade this pattern because this pattern is a continuation pattern to the upside to continue the previous trend. So the market range here, so it must have to continue to the previous trend. So that is why I took this trade. So I placed placed call, expecting the price to go up, but I still notice that sellers still want to go down by mitigating this buying order zone. So immediately I noticed that I saw the candle even close exactly at this point, at this trend line. I didn't adjust the trend line, I just draw it randomly. And it closed exactly at this trend line. It's just like maybe the broker or something like that, or maybe the candles know how I draw the trend line. Let me tell you, even though you draw trend line or horizontal line, it doesn't mean that the market is going to reverse. All this trend line you are drawing doesn't concern the candle. The candle just formed. Okay, the candle just formed. It's global something. It's not something that the line can control. Your line cannot control the candle. Your line is just to indicate the level that market reverse. Okay, so immediately I noticed that the price closed here. So I decided to go with buyers on the next candle. I go with buyers on the next candle because that buying activities that I saw here, that I recognized here, is what I'm still making use of. That this is the time the momentum will start. Okay, I did not plan that momentum will start here, but according first trade which I took here, first trade which I took here made me to understand that maybe the momentum will start. The first trade I took here after seeing some buyers activities here, because this market drop, I did not know that's going to be momentum like this. Okay, I did not expect that. But what I'm doing is that I just want to take trade once the price come to this level. Until I later find out that there are some buyers activities after seeing the way the price are reacting when touch this zone. So I expect the price to form a momentum at that moment, but it didn't form. Now again, the sellers mitigate that zone again. I saw buyer's entry. Now, after seeing the buyer's entry, I saw that this candle showed a sign of reversal. You know, when the market is going down, something like this, the market is going down, and touch a strong level, and the candle form like this. The candle form like this. That is a sign the price is now ready to go up. Okay, the price is dropping strongly, drop very strongly, and reach a strong level, and form a candle like this. It means that it's now ready to go up. Does this candle means? What does it tell us? It tells us that by the time the sellers stop at this level, the buyers try to go up, but they are not ready here to go to form a strong body, but they show a sign that they are available at this level. So there's a strong buying pressure, but later got rejection from sellers. That is strong selling pressure. But the candle did not close as red, so the sellers could not be able to overcome the buyers' power here. So that is why the buyers still form a green. If this candle is red, we can expect that the price should go down. If this candle is red, we can expect the price should go down. But I didn't accept that. I didn't expect that. Okay, I still go with buyers. I still go with buyers confidently, because when I notice the buyers activities and this trend line, and the rejection, so I know the buyers is going to enter. Okay, and seeing this candle now make me to understand that okay, fine, buyers will go up, buyers must enter the market. Okay, seeing this candle here tells me that the next candle should be green, indicating that the buyers should now be available to enter the market. That is why I still go with buyers. Then the trend line which I draw, I didn't pay attention to this trend line again, because I know what has happened on this level. I know what happened on this level. So I didn't pay attention to the trend line. Then I was looking at this candle. The first time the market hits this trend line, the first time the price hits the trend line, after I opened the trade here, the first time the price hit the trend line, immediately it touched the trend line, there was a strong seller's candle trying to close below, but unfortunately the buyers entered. And as buyers entered, they closed above the line, which tells me that we give me confidence that the price is now ready to go up. Okay, so it closed above the line, though I didn't adjust the line. It closed above the line, so the price is now ready to go up at that moment. It's not like this that closed below, but this time it closed above, so it's now ready to go up. But you might still be wondering, or you might still be considering about this horizontal level. Okay, you might still be considering about this horizontal level, but it's not doesn't work that way. This horizontal level will not work that way. So when you are trading, pay attention to the pattern. You might see a pattern might form and you will not know, and you are trying to use horizontal because you saw this level here, market reverse here. You are trying to place call option until the price reach this level before you place put, but you don't know that the price is making use of this trend line. That is my mistake there. I didn't know that the price is making use of this trend line. I've already drawn the trend line, but I still doubt it. So here, the price is not making use of this. It has broken this trend line. Definitely, there's opportunity for the price now to go more up. So when I saw the price close above, I wanted to draw the second trend line above this candle. Something like this is what I want to do. I want to adjust it to this level. But I found out that even though I do this, even though I do it like this, buyers will still enter. There's no need of me doing it. Reason why is because look at this level, this horizontal level. Okay, this horizontal level. After drawing the second trend line here, this candle closed inside the level, I noticed that even though the sellers might try to enter, look at this horizontal level. This horizontal level will not allow the sellers to enter. And because the price is going up, because of this pattern, the pattern should go up, not down. So that is why I decided that I go with buyers confidently without going with sellers. In most cases, you should go with sellers in that kind of situation when the candle close here. But because of this level here, the price is going to, sellers might try to enter. That is why we see this lower wick. Sellers might try to enter, touch this level, and buyers enter because of this pattern. So this pattern is a continuation. So that is why I go with buyers continuously. If there's no pattern, if it is not this pattern that form, then you should be worried to go with buyers. You should be worried to go with sellers, not buyers. But this pattern, symmetrical triangle, is a continuation pattern to continue this bullish movement until they hit this supply zone. Okay, so that is what I expect. So I go with buyers because I know the price is going to touch this level and touch this zone before the buyers enter. That's why I go with buyers. And because the pattern is telling me that the price is supposed to go up, not down. Okay, if the price is going down, if this pattern says that this is a reversal pattern, sellers will enter here. So from here, you can go with sellers continuously. But this is not a reversal pattern, it's a continuation pattern. Go and learn about the pattern, the chart pattern. Okay, it's a continuation pattern. So that's why I decided to go with buyers continuously. So not all the time you draw two double trend line and you draw double trend line support or double horizontal line, you expect the price to reverse. Try to pay attention to the pattern. Okay, don't ignore the pattern. Anytime you open the chart, first look at the pattern. Let me tell you, if you do this within 1 week, you will understand how the market moves. Anytime you open the chart, first look at the pattern. The video I upload some days ago, I think maybe is it Friday or Saturday or Friday night, I had the bearish momentum strategy. The first time, the first thing I do is that I've already go through all the charts, check everything before I start trading on the trading. I've already opened all the charts. So immediately I open the chart. I've already checked. Then I saw this pattern. This pattern, when the market is moving down, it always moves like lower highs and lower low. Okay, I saw this pattern. I say, wow, this is the type of pattern I always want to see anytime I'm trading a downtrend, or if I'm trading an uptrend. This is the type of pattern I want to see, but not the pattern you will see movement like this. You will not know if the market is going sideways or going upward or going downward. You will not know, but the market will just move zigzag randomly. So that's not the pattern you should look for. I saw a clean structure, which I know that the market is giving me. Let's say the sellers are here, so I know that this kind of move will occur. Then I now locate another support, which is right here, that the price is going to drop to the downside, which means this pattern, if you look at it, this pattern is a continuation pattern. It's a continuation pattern because the market is moving continuously to the downside, just like this. Okay, so until the price reaches a level, maybe a level like this, or another level on the left side like this, before you can decide to let me stop trading here. Okay, so this is the pattern. That's the first thing you have to look for anytime you open the trade. First, observe the pattern. Okay, now when I open this trade, I saw the buyers. I placed call option. Now the buyers again enter. I won the trade. Then I still go with buyers. By the time I open this trade, by the time I won this trade, I've already checked on the left side. Where is this thing happening here? What is exactly is happening here? Is it on the same level? Because this is a trap zone. This is a trap zone for the buyers and sellers. Okay, which means the market might still come to that level and sellers will enter. That is a trap zone. But when I notice that the way the market is moving so fast, the buyers are entering the market so fast just to reach the supply zone. So I noticed that this is not level. This is the level. The market is not going to respect this level. So I just ignore. I already checked. Immediately I open the trade, I check. I saw this level. I just ignore it. I just remove the line. I remove the line because the way the buyers and sellers are entering the market rapidly tells me that they will violate those level, those zone. So I noticed that let me go with buyers. Then I go with buyers on the next candle, and the candle opened very strongly. The first thing I observed here before opening this trade was because immediately this candle closed, there was a gap down. There was a gap down, which means there are some sellers activities going on around here. There are some sellers activities. So pay attention to all this week. The buyers try to push the price higher, got rejection, got rejection. Tells me that there are some sellers activities going on around here. Okay, there are some sellers activities going on around here. So by the time this candle close above and there's a rejection, which tells me that that seller's activities going on around here, they are still trying to push the price down. That is why they try to push the price down. There's a gap down. By the time the price gap down, it had to test this previous high before it goes up. That is why I didn't open the trade immediately. I observed that. I observed the buyers, the sellers activities here. I didn't open the trade immediately. So when I observed that, I now open the trade at the right point. I didn't draw the level. I didn't draw the level, but what I did is this. I'm using the look at the price bar, look at mouse, the mouse cursor. I was just testing the mouse cursor, doing something like this. Okay, that is how I do analyze the market. Not all the time I will be drawing lines. Okay, most of the time I don't draw lines. Most of the time I use this my mouse to draw to check the previous what has happened on the left side. So I'll be locating the price bar. Okay, so when I put the line here, this was the candle I placed in my cursor. Then I checked the line. I saw the market is going to test the level. So I now enter a call option here, a good entry point. So that is why I go with buyers here. Then immediately I go with buyers, I still pay attention to this. That this is a level. Should I go with sellers? I say no, let me go with buyers because this candle is very strong. So I decided to go with buyers on the next candle. I go with buyers, then I finally draw the line. I have not drawn the line yet. I have not drawn the line yet, but I finally draw this line. When I notice this trap zone, that this is also a zone, a supply zone, which you can expect sellers entry. But because the buyers are entering the market rapidly and because of this pattern, it will continue. It will look for a separate, a quiet zone before it reverses. The market will look for a quiet zone before it reverses. This zone here is not quiet because we see green, green, rejection, rejection, red, green, red, green, red. It's not quiet. Means that there are so many noise, so many other going on here. So it's not quiet. So the market has to look for a quiet zone to rest. A quiet zone. That is this zone. So when I notice that this is a zone here, this is also a zone here, a supply like other block, OB zone. So I now draw my line here. I draw my line. If I should draw the second line, it will be something, it will look like this. Okay, the body of the grey candle and the highest and the highest wick. Okay, that's how it will look like. But I just use one candle, one line, one line, one horizontal line to draw the level. So I know the price is going to rest on this level to look for a quiet zone to rest. Okay, so that is why I go with buyers because there's still a gap. I go with buyers. Now, you know what happened next? I didn't open trade on these two candles because one thing is that anytime the market is forming or the time the market is moving up like this, let's say the market is moving higher, higher like this, and then touch a strong zone. If the market will retrace, it's going to retrace twice or three times. That is my expectation that okay, I'm not going with buyers, I'm not going with sellers in this trade. Let me go with buyers. So the price reached this level, I didn't go with buyers. Okay, I didn't go with buyers. So I just go with sellers. I just wait for the sellers to enter, and then they not enter immediately after this candle close because most of the time market can give you two retracements, three retracements, or four at times. Okay, so by the time the market give me first retracement, second retracement, then I now go with buyers on the next candle. I didn't go with buyers after because I know the market is going to retrace. I didn't even go with sellers at all. I just wait. I wait for these two candles to form. Then I go on the left side, I check that this is also a level because I'm expecting the price to come to this level, touch the level, okay? And immediately this candle close. You know, when this candle close, it tells us that, and it's very close to this level, it tells us that there's going to be very small sellers candle or very small green candle or a doji candle. Let me explain this area again. This is a level, right? This is a level here. This is a level here. Then this candle close here. I expect the price to continue. Now, my mind is telling me that anything can happen if the price is going to continue to this level. Either it form a small red candle, or it form a small green candle, or a doji candlestick. But I decided to go with buyers. I didn't go against my rule because I know that my rule tells me that after the price reach this level, the market is going to retrace twice. Okay, let me go with buyers anytime I see opportunity. Once they retrace back to this level, so I decided to go with buyers because anything can happen here. Anything can happen here. Buyers might enter, sellers might enter, or a doji candlestick without color might form. So that's why I go with buyers. Let me even though I lost the trade, I will still lose the trade. Let me say I go with buyers and sellers enter very weak. So it's just that I did the right thing here. That is why I decided to go with buyers. I waited for sellers two candle to fall. So I go with buyers. Immediately the candle open. I didn't open the trade. So I have to wait for the right opportunity because if sellers entered, it's going to form like this. If sellers entered, it's going to form like this. The body is going to be weak. Even though a doji candlestick will form no green, no red, the body is going to be weak. So that is why I take my time to open trade once the price close here. Okay, this tells me that I'm already in the mood of trading. You know, I start, like I said, I start trading. I start trading, or let me say, I start analyzing the chart since 2 p.m. Maybe is it 2 p.m. or 3 p.m. Since 2 p.m. or 3 p.m. I start studying the chart. I didn't open trade. I start looking at everything. Even I go to forex, I do some analysis, I stop. I still come back to binary, do some analysis, I stop. I still go again, I rest, I took some break, then I go back again. I then decided to take some trade. So I've already taken some trade before I open this trade. I think I've made up to $1,000 today. Maybe I have withdrawn some amount. So I've withdrawn some amount. I'll be expecting my withdrawal maybe tomorrow morning or tonight. So what I'm saying is, anytime you open your trade, let what you have planned come to your mind. Plan before you open any trade. If I decided that let me open another currency pair, if I decided that let me trade here because I have already analyzed that this is some of the trade I took. I took some of this trade in the past. I've already analyzed that in my mind that okay, I want to see a trade that will give me a movement like this to the downside. Like for instance, I want to take a trade uh, like bullish pattern, like uh, bullish flag, bearish flag. I want to open a trade like bullish flag, bearish flag. Then I will draw. I will start saying that this is the pattern. If I should go with a bullish flag, let me say bullish flag, I need to look for the pole. Before the pole will occur, I need to look for something like this. I need to look for, let's say, a bullish flag. I need to see something like this. Okay. Once I see that the price goes up and then drop and then rise again, then I will now look for any opportunity where the price is going to form this pattern, this bullish flag. So I will look for opportunity where the price is going to form this pattern. I've already seen this kind of movement, meaning that the price are trying to go up. So I'm not saying you should wait once the price form a strong move like this, a strong move, and you are seeing this pattern. You are seeing this pattern. Let me tell you, this pattern will only work for you. This type of bullish flag will only work for you, say, let me say 60%. But I've seen that This type of pattern is the one that worked perfectly than this. This one is just a momentum, and then the market start consolidating here. Then you have to go buyers. I see that it worked like almost, let's say 60%. Why this one work like let's say 90, 95%, 90%, 80% most of the time. So this is the pattern. If I want to go with bullish black, this is the pattern I will be looking for. If I see this pattern, I will not trade. That is discipline. Try to discipline yourself, discipline your mind, discipline your emotion, discipline your brain. Don't say because of bullish pattern, you saw this pattern. But this is what comes to your mind, that if you see this type of pattern, you go bias or you place your trade. But you now check out the chart for a more almost 3 hours, you didn't see this type of pattern. Then you now decided that you now saw this pattern that form. You decided to hold, take this, use this pattern. Before you know, the pattern will not work out well for you, and you start losing the money. So because you are going against your thoughts, going against, if you have a strong what you decided to take, any trade you want to trade, any trade you want to take, don't go against your mind. Don't go against your mind. Focus on what you have planned. Okay. Let's say first, let me check out that currency pair and let me see. You can see that immediately the price drop from this demand supply zone. It have to look for this level here. This two reversal level here. Let me draw it. The price has to look for a trap zone. Okay, it has to look for a trap support zone. This is the trap support zone I'm talking about, because market reverse buyer center, seller center, buyer center, then the market comes to that level. So you have to look for that level before you finally reverse to the upside. So that is how the market moves most of the time. So pay attention to all those zones anytime you are trading. So let me go and check other charts. Let's say, for example, I want to take trade here. Let me say I want to take head and shoulder pattern. I open a trade, I open my chart, and I want to take head and shoulder pattern. The head and shoulder pattern which comes to mind is that if I see head and shoulder pattern like this, head and shoulder pattern like this, I will open the trade. Not the head and shoulder pattern that will look like this. Okay, not this one, but this. I open the trade. Whereby this is the neckline, I open the trade. So this is the left shoulder, the head, and the right shoulder. So I open a trade. But let's say this type of pattern comes to my mind. Then I open the chart and I saw this pattern. I will not take this pattern because this is not what comes to my mind. I will not take this pattern. If you observe that, those of you that join the signal group, those of you who join the signal group, you observe that anytime I see a pattern, I will not open the trade immediately. I will wait. You might be wondering that maybe I'm still checking the chart or something like that. I'm trying to follow what my mind tells me. If my mind tells me that this is the pattern I'm looking for, I'll make sure I use this pattern. But if I now use this pattern and I lost, I will not trouble myself. I will not say because I use this pattern that comes to mind, let me go with the second pattern. So what I'm saying is that this is the pattern I want to look for anytime I'm trading head and shoulder pattern. Fine. What I'm going to do is like this pattern that formed. If you observe this pattern, this is head and shoulder pattern. Inverse head and shoulder pattern. Okay, this is inverse head and shoulder pattern. This is the left shoulder, the head, and the right shoulder. Okay, but when we want to open trade in this kind of situation, avoid when the market is gap, when there's a gap in the market. This is bullish candle, but the market gap down. Avoid it. Just open a trade at the right time, at the right opportunity, and then close trade. Let's say you go with buyers continuously. Close trade once the price reach the next high. If you observe the video I uploaded recently, immediately the price touched the next low, I closed the trade. Though I took the trade, the last trade there, but I closed the trade. I did not see let me go with sellers continuously. If you observe that sellers still entered very strongly after I upload the video, after I've already took the trade, you see that sellers still entered very strongly with the momentum. So I'm not saying that I lost that opportunity. No, I didn't lose anything. I've already made some money that day, so there's no need for me to trouble myself. So I have to stop trading immediately the price touch the next high. Which means if I open a trade here I go with buyers and this candle touch the high, I will stop. Then I will now go for next pattern. Let me say I decided, let me go with let me choose a bearish flag pattern. I will go for the next pattern. Let's say this is a bearish flag pattern. This is a bearish flag pattern. Okay, so this bearish flag pattern tells me that we have lower highs, lower low, lower highs, lower low, lower highs. So this is a bearish flag pattern, which means if I want to go with sellers in this kind of situation here, this bearish flag pattern means that I will go with sellers continuously, not buyers. Which means the price have to close below structure, break any structure low. Okay, so I have to go with sellers. I have to go with sellers. This is the bearish flag pattern, right? So I have to go with sellers immediately the price close below this structure. So I have to go with sellers continuously, which means this is going to be my lower highs. Okay, this is lower low, lower highs. Then the price break this structure is going to give me lower low. And the price pullback at any level, at any length, or maybe this level or anywhere. And once it drops, it's going to be my lower high. So which means I'm not going with sellers if I see this type of pattern here. What I need to look for is to wait for the price to give me what I want, which is for the price to give me what I want, which is it has to close below this structure. It has to close below this structure. If the price has not yet closed below this structure, the market is still in an uptrend. Okay, the market is still going up, it's still going upward, not downtrend yet. Until the price close below the structure, a downtrend is now occurring at that moment. So which means I will go with sellers immediately, because when a downtrend occur, it means that this is a the bearish flag pattern here did not work out. So here the market has not yet closed below this structure, and then it's still respecting, which tells us that the price are still pushing the price higher. The buyers are still pushing the price higher. Let me take the chance. Let me see if I'm going to win this trade. Okay. So which means the buyers are still pushing the price higher because the price has not yet closed below this structure. Once the price closed below this structure, the sellers has now is now ready to go more down. But without it, don't open any trade. Don't say because of bearish flag, let me open the trade. That is not what I mean. That is not my plan for this trade. My plan for this trade is that this type of bearish flag pattern should close below. Once the price closes below this low, then I will go with sellers. If not, I'm not open any trade. Stick to your plan. Don't go against your plan. Don't change your mind. Don't say because someone is going with buyers, someone is going with sellers. Okay, I lost this trade. Someone is going with buyers, someone is going with sellers. You see that I go with buyers, but this is not the buyers I want to go with. I saw opportunity to go with sellers, so I have to stick to my plan, not to go with buyers. If I should go with buyers because of this movement, if I should go with buyers because of this movement, I have to draw the trend line very well. And I have to know the type of candle that will form. So not that because I expect a bearish pattern, then the market doesn't give me a bearish pattern. Then I saw a bullish pattern, decided to go with buyers. You might lose or you might win. So don't change your mind. Stick to your plan. Okay. So that is that. On then another thing, what I used to see, what I used to hear so many people talk about when you try to open a trade. For instance, you try to go with buyers, and your mind is telling you that go with sellers, and you go with sellers. You are having double-minded. The first mind, your mind is tells you that let me go with buyers. The second mind tells you that go with sellers. That is double-minded. And a trader who has a double-minded in trading doesn't last long. If you have a double-minded in trading, you don't that type of trader doesn't last long in trading. They are the type of trader who blow account, and they are tired of blowing account, so they now decided to go against their first thought by having a double mind, a double thought that this pattern, this candle is supposed to be green. Okay, the green come to my mind. Let me go with red. Decided to go against. That is not trading. Trading is not a gambling. Those who take trading as a gambling are those people who are blowing account. I don't take trading as a gambling. I don't say let me go with buyers. Even though at times you notice that I always stick to my word. If I go with buyers here and sellers enter, that doesn't mean that I will go with sellers continuously. I have to go with buyers again. because I know that the price should go up. Maybe that time the price doesn't want to go up at that moment. That's why I lost. But I have to make sure that the price really want to go up, so let me go with buyers. So what I'm saying is, if you decided to open any trade, don't gamble, don't gamble the trade. You can do that on demo account, you can do that on tournament account. But when it comes to real account, take it as a business. I take trading as a business. Okay, that today, if I decided to make $10,000 today, I will make it as a, I will take it seriously. I will take it seriously, and I have to follow my rules. I know what will happen to me if I didn't follow my rules. Remember the video I uploaded some days ago, the video I uploaded on which I lost so many, trades. I think I lost about 30 something, 30 something dollars, or maybe 40 something or 50 something. I don't know. I took a trade and I lost so many trades. I hope you guys remember. It's because I didn't follow my rules. I just opened the chart. Someone just talked to me and that person get me angry. So I just opened the chat that time. I started giving you guys class, having you guys giving you guys a class. Then I just opened the chat. I start trading without even having a plan. But my plan was that let me open trade and support. But immediately everything will just happen. Network just give me problem. Um, Network, late entry, uh, not following my plan. Everything they just frustrate me. The market just frustrate me. So what I'm saying is that if you are going against your plan, always trade. Look at the market now; it's going up. The market, don't say because it's going up, it's not going to come down. It will still come down. You can extend the line. So don't lose focus if the market is going up like this. Don't say, the market is not coming down again. It might just reach this level and reverse very strongly and then close it. By that time, you should be able to open your trade. So this time, don't say you want to because you have do so. If you want to go against or you don't want to take any trade here, you can skip the trade. Go to next chart. Go to next chart, open next trade, let's say NSD USD, and you already have in mind that this is the pattern you are looking for in this trade and doesn't give you and doesn't work out for you. So still have it in mind that anytime it will work out. But go to NZD USD. Just open NZD USD. NZD USD. Let me say I want to trade a continuation pattern like uh, triangle pattern. Is it symmetrical triangle? Yes, a continuation pattern, or like head and shoulder pattern, or let me say I want to take trade on supply and demand, support and resistance, price action using a trend line, Fibonacci, or moving average, or using indicators. If any of these things comes to your mind, you have to stick to it. Stick to your plan. Don't change it. For instance, I want to take trade using supply and demand here. So what I'm going to do is draw my supply, draw my demand. I will look at the chart. The chart even is a downtrend. So what I have to do is place trade at the supply, not demand. You know, this is demand here. This is demand here. Don't say you want because the price touched the demand, you want to go with buyers. No, it's very wrong. The market is going down and the market is at the demand. You want to go with buyers. Why? Look at this. This is a demand, right? This is a demand zone. By the time the price touch the demand, buyers are supposed to enter very strong, but the market is still going down. So what you have to do is to look for supply in a downtrend, not demand. Like now, the market is going down. I will look for a supply, not demand. If I check on the left side, I have to see what is going on here. Look at this two red candle. Tells me that there are some strong selling pressure occurs around this area, and there are some strong selling pressure that occur after this green candle, which tells me that this is my supply zone. That is order block. Okay, this is my supply zone. And what happened? The trend is still down again. Before the market could reach this supply zone, there's a resistance. Let's say there's a mini resistance here. There's a mini resistance, so market doesn't respect the resistance, and then it move on to the supply zone. So from that supply zone, which means that if I want to trade my supply and demand zone, I have to pay attention to so many things. Number one, the trend. Number two, break of structure. This is a break of structure. This is break of structure. This is downtrend. Break of structure. Okay, break of structure. The price break the structure low, and then the the resistance level which the market is respecting in the past. The market is respecting this resistance, and then finally the market doesn't respect the resistance. So after the resistance, I have to look above it, that this is a supply zone. So I have to wait for the price to come to this supply zone. Then I open the trade. Okay, then I open the trade. Not that I will just go on the open the chart and start drawing supply and demand zone without paying attention to everything. So if I didn't see this type of pattern on supply and demand zone, I'm not going to open the trade. If I didn't see this type of pattern on supply and demand, I'm not going to open any trade. I will just close the trade or go to next chart, wait for the price to give me what I want. Now the price is now at this resistance level. So now you're expecting the price to drop, right? But look at what has happened on the left side. Let's see what's going to happen. Okay, let me try to predict the next direction here. So let's take it slowly. This is a downtrend, lower high is a lower low. Now this is an uptrend, high is an high low. We want to predict the next direction here. The market is moving like this. This is how the market is moving, right? The market is moving, and then we have the resistance here that the market is respecting so many times. Resistance, the market is respecting resistance. It was a support, and then shake out, a fake out zone, the market goes up. So that's the resistance. And now here, the market is now at the resistance, and then give us, we have both the resistance, we have this type of movement. One last green candle, a gap up, and the market gap down. The sellers enter very strongly, which tells me that the market is waiting for us. The sellers are waiting for us to supply here. The sellers are waiting for us to supply here. So which means the price might come close to that level and then drop. Price might come close to that level and drop. By the time the market is respecting this resistance, do you see that sellers are very weak? Okay, check again. Check again this resistance. Strong sellers entry, strong sellers entry, strong sellers entry from resistance, strong sellers entry, strong sellers entry. But this one, very small sellers entry. The price did not respect, so it's going up to test the supply zone. Sellers are to supply from that zone. Definitely, the price is going to reverse from the supply zone. What do you see at the supply zone? A sign of reversal, a weak green candle formed with a huge selling pressure or a huge rejection from the supply zone, and the market will have to drop. When the market will drop, where is the next low? By the time you are trading supply and demand zone, always pay attention to the next low or the next high. Where is the next low? The next low, okay, guys, give me some minutes. I'll go on to okay, so where is the next low around this area? This is supply zone. Where is the next low? If you enter a trade here, where is the next low? This is the next low, which means anything can happen once the price comes to this low. The price might just be forming small red continuously until it reach this zone and then reverse. Or the price will just form a strong green red candle, one red candle, and finally reverse. So maybe you are trying to place 3 trades here, but immediately the candle just drop and touch the level. Very strong red candle touch the level and it's going to reverse. So don't say because it touched the levels you are going against it. No, you enter the trade here, close the trade here, just like you are trading forex. Enter the trade here from this zone, and close the trade here. That is what I did in the last video I upload on YouTube. I enter the trade from supply zone, close the trade at any next the next high, next low. That's what I did. Okay, okay. So you see that the market dropped and the price tried to go down, touch this level, and the buyer center. Maybe you are trying to go with seller because there's a gap and you lost. Don't worry about the loss. The price is not going up again. It will still go down. So anything can happen. This type of movement can happen. At times, sellers might fill the gap. At times, the buyers will just form a green candle once they touch the level. So just go with sellers again. Go with sellers again until the price reach the level. You cannot go with buyers because if you want to draw the level is going to be something like this. Next low, the level is going to be something like this from the body, or let me say from the wick, or let's say from the body to the next wick. Just draw it like this. So once the price touch, you can expect a buyer's entry at any moment. Okay. So that is how you trade. Don't have a double mind by going with you want to go with buyers, but your mind is telling you let me go with sellers, and you go with sellers. You want, you're happy with it. If you are doing that every day, you will see that you'll be frustrated and you will blow your account. You'll be frustrated and you blow your account. Today I make almost 1,000 or almost is it 1,000? I'm not counting them. But what I withdraw some amount, then I left some balance in my account. So this is the balance that is left in my account now. So I've already withdrawn some. So what I'm saying is, if you are trading, don't have a double mind. Don't have a double mind. Stick to your plan. Don't go against it. If your mind tells you that this is going to be a buyer's entry, go with buyers. Even though you lost, you are doing the right thing because loss is also part of the game. For instance, this trade now, you might say you want to go with sellers, but you go with sellers at the market. Even me, I will go with sellers. Even me, because this is the next low. This is where activities of buyers and sellers occur. So I will try to go with sellers. So if I go with sellers and I lost, that doesn't mean that I will now go with buyers because I have lost this trade. I will go with sellers because I will still be very stubborn that this is the level. I should expect buyers, not here. This is just like testing the level with a week. That is why the market reverses. So when you are trading, trade according to your plan. Don't go against your plan. Okay. So that is what I have for us today. So just trade according to your plan. If you have a plan before you open any trade, trade according to it. And money, one thing about when you are investing in trading, invest more than don't invest more than 5% of your balance. If you have $50 account, if you have $50 account, don't say you want to invest $10. For me, I can do that. But you will notice that most of the time you will see me open a trade of $10, open a trade of $50, open a trade of $20, open a trade of $100, open a trade of $500, open a trade of $5, open a trade of $2 or $3. It depends on the amount I have in my account. If I open a trade of, like now, this is $50. If I open a trade of, that's why I open a trade. If I open a trade of $30, that means that I have $50 on my account. If I open a trade of $10, I have $15 in my account. If I open a trade of $5, I have $10 in my account. So if you see me open a trade of $5, that means the money in my account is $10. If you see me open uh, a trade of $50, which means that the money in my account is 150, not 100. I'm not going to use half. No, $150. If you see me open a trade of $3 per trade, that means the money in my account is $7 or $5. So I'm not using. I just do it the way just to manage my money. And one thing I want to say again: if you lost trade too much, don't recover it in a day. For instance, if you open a trade with $10, you start with $10 trade, and you want some of the trade up to $50. Let's say up to $100. Yes, up to $100, and you didn't stop trading. You didn't stop trading from $10 to $100. You didn't stop trading, and you are trading, and you continue trading. You are still making profit. But something just happened. The market, you start losing money. Because of that loss, you try to use the whole money, or you try to use bigger amount of money to recover the loss. You still lost again. You try to use again, you still lost. That means you are trying to recover your loss without 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 discipline. You are trying to recover your loss without discipline. By the time you are doing that, you end up blowing your account. Someone told me some days ago that he knows how to trade, that he can analyze the chart very well, he can draw the level very well, he knows how to trade, he knows how to predict candle. But one thing with the problem he has in trading is emotion. He said the problem he has in trading is emotion. That what should he do? How can he control his emotion? I told him that if I told you can control your emotion in an easy way, it might not be easy to you, but for me it can be easy to me. So you have to do it. Just do it. Just control yourself. No matter what it takes, just control yourself. Control emotion is easier said than done. That's what we know. If I tell you control emotion, it's just easy for me to say to you, but can you do it? Can you even control it? So what I'm saying is that control your emotion. Control your emotion anytime you are trading. So don't say because you lost and you want to recover the loss in the day. Don't recover loss in the day. Lost $50. Say even though you lost $50, don't say you want to recover that $50 in a day. You can recover that $50 for 10 days. Because if you that means that you are you are still trading. Because when you blow account, you know when you blow account, you will not trade anymore. Even though you know that you are blowing account, you put money, you blow, you put money, you blow. Since the beginning, you start trading on life account, you have never withdraw. That is, let me say, that is bad because you continue to blow, you continue to blow. Since the day you start trading live account, you never withdraw because even though you make up to $100, you will not withdraw. I don't know what is in your mind. I don't know what is controlling you. You will not withdraw. Why can't you withdraw half of the money, or you withdraw your initial deposit and leave the rest? Continue trading with it, or you just withdraw half of the money just for you to make sure that you put in money, you make profit, and you withdraw. But if you continue leaving your money there, the money will just be growing up, and anything can happen. You blow the account. Before you know, you put in another money, you blow it again. Put in another money, you blow it again. So you just be blaming yourself that you are blowing accounts. No, it is you that cause it. It is you that cause it. So when you make profit, withdraw. Okay? You see the market is reversing from the supply. You see the market is reversing from the supply. And what happened? The market reversed from the supply. So what happened next is this. By the time the price is going up, it creates higher highs. This is high. This is low. This is high because it breaks this previous high. So by the time the market is going to drop, it's going to test any support level. Let me show you. So let me let you make you understand very well. Market is moving down, lower highs and lower low, right? Lower highs, lower low, lower highs, lower low. Then the market start going up. Maybe the market find a strong level, start going up, and then it created a demand around here. The market created a demand zone here, and then it push to the upside. After pushing to the upside, it break this structure because this is the price when the price is forming lower highs. So you have to break the structure. By that time the price break the structure, that means that the market is not ready to go up. If the market break this structure high, it's not ready to go up. So which means the market has to look for any resistance to reverse. The market can look for resistance somewhere around there and reverse. The market can just move a little bit and reverse. The market can just reverse or look for resistance around here and reverse. Just for the market to look for any resistance level to reverse. Okay. So by the time the market will drop, it has to come to this supply to this demand zone. This is the demand zone. So the market is going to test this demand zone and continue. Okay. Here we have the supply. We have the supply around here. But did the market respect the supply? Didn't this candle close above the supply zone? So that is why when you are trading supply and demand zone, trade in the direction of the trend. Don't trade against the trend. So by the time the price will rise up to this level, it has to look for any supply, any resistance level. Touch here, touch here, touch here. So you have to look for resistance level and drop. The market still have to close above this high, and then it has to look for demand zone. This is another demand zone, and from there we see a buyer's entry. It still close above this high. It has to look for any resistance level and drop. So the market has to look for any demand zone. This is the next demand zone here. This is the next demand zone. So by the time the market look for this next demand zone, we see that the market consolidates, touch again supply. The market did not close above this level. As the market did not close above this level, it's now going down. So the market now closed below this low, which tells us that a new downtrend has occurred. The price closed below this low, tells us that a new downtrend has occurred. Just what is happening here. It closed above uptrend, close above uptrend, close above uptrend. But this time close below downtrend. So when you want to go with sellers, what you have to do is wait for the price, look for any supply zone. Where is your supply zone? This is your supply zone. So wait for the price to rise to this level and go with sellers. Wait for the price to rise to this level and go with slabs. So as the market has break this structure low, the market will look for any support. This is support. Okay. I'm not saying because the market will look for support and you go with buyers. Try to do the right thing. Don't do any other thing yet. Try to do the right thing. Don't say you want to go with buyers. Buyers might enter, yes. Buyers might enter. But even though buyers enter, you miss the opportunity to go with buyers. Fine. But do the right thing by going with sellers because the market has breached the structure. That means a downtrend will occur. So the market is going to look for any support level that will make the price to reverse to the upside. Once the price reverses to the upside, it's going to test the supply and then it drop. So if the market did not reach the supply before it drop, if the market did not reach the supply before it drop, it means that they're respecting this trend line. But pay attention, two things, either the trend line or the supply. But if you want to make a good profit, wait for the supply. Wait for the supply because what the market can do is that the market can just go up, touch this trend line, reverse a little bit, and you say, "Oh, sellers are now going down," and then the price will just come up again by testing the demand, the supply, and drop sharply. So when you are see that buyers are entering the market, they look for a support level. The price has to look for support level, which is right here. So it's going to continue to this level. Sellers might still enter in the way. Sellers might enter, my seller might try to enter maybe a bearish candle, or maybe the market will consolidate before it go up. But wait for the price to come to this level. That's why I say, if don't say because the price is going up, then you want to go with buyers. No, don't do that. Because market might consolidate and your time will be wrong. So don't do that. Wait for the opportunity, for the right opportunity to place your trade. Even though the market still go down, that doesn't concern me. That is not my problem. That is not my problem. Because I have already done what I have to do here. So I don't know why the market is going down. I don't know. So if I should know the reason why the market is going down, then I can decide to go with trade, to go with sellers here. But I don't know. I don't have the knowledge. I don't have anything to let me just open the trade. Let me just expect the price to go up. Okay. So that's just it. So that is one thing about trading. Following your plan. Don't go against it. Don't let people confuse you. Don't let people confuse you because that is one thing that is causing you to lose money in trade, to lose trade. People are confusing you. You will see a setup today, and you see a setup today you are using today, maybe setup I teach you today, and another person still come up with another setup the following day. You might be confused. Which setup are we to trade? Because most traders think that when they are trading supply and demand, they only think that anytime if the market touch a strong level like this one, they will say this is a supply because the market reverse, market reverse, market reverse. So they are waiting that the fourth time the market will reverse is going to be. So they are saying that that is a supply. Okay, you might be confused. I've seen so many traders saying that this is a supply, because it has so many touches. But don't be confused. That is not how I see supply. That is not the way I see supply and demand. What I see supply and demand is to see a strong move or see a zone before the strong move. Okay, or I see a single candle before the strong move. Like this is a single candle before, like this rally based rally. The market touched it, so then they continue. But because it doesn't, because this is a supply zone here, this is supply zone. That is why the market dropped massively. See that buyers are trying to enter. They look for support. Buyers try to enter. That's why I say don't trade like that. You see that buyers try to enter. You will have placed call option for 5 minutes, saying the price will go up to this supply. The price might just form two green candle and then go down again. And from there, the market will still go up again, go down, go up again, go down before it finally find its way toward the supply. So that's why I said do the right thing. Place your trade at this supply. Don't place your trade if the market is going down there. So that is what you have to do. Anytime you open a trade, what you have in mind that what structure of the market you want to see, what patterns do you want to see, what analysis do you want to use, what method of trading you want to, which indicator do you want to use. Before that, you should plan it. Okay, so if you don't plan, everything will just look like you don't know how to trade. You will just lose 10 trades in a row. If you lose 10 trades in a row, you don't know how to trade at all. So have it in mind. Anything you want to do in this life, you must plan. You must plan. I think today is uh, today is 4th of July. Uh, July 9th, on the 9th of July will be my birthday. This July 9th, July, on the 9th of July will be my birthday. So now it's no problem. I just want to remind you guys. So on the 9th of July will be my birthday. Okay, guys, I think I should stop here for today. So if you see the buyers are trying to enter, the buyers might not decided to enter this moment. But don't say it because I said that you will now do buyers. No, don't do that. Stick to your plan. Market might decided to form another pattern like this: up, down, up, down, up, down, up, down, up, down, before it finally find its way to the supply zone and drop. Okay, so just plan that this is where you want to take the trade, not here. So that is how you analyze and that is how you plan for trade. Don't trade anyhow. Don't trade anyhow. If you are trading your life account, even though you want to be serious in trading life account, do so in demo account. Do so in tournament account. Be serious about your trading. Don't trade anyhow. I know some of you are serious. I know some of you who are not serious. Yes, let me just say that. I know those who are not serious about trading. They are just in the group. I didn't hear from them. I didn't maybe I didn't hear maybe they have problem but they cannot say it, or maybe they are too well. Let me just say, if you have any problem, there are so many of you who chat with me privately, and I just decided to give you a class or something like that. I know some of you in that group that are very serious, that all the time, anytime I open my phone, or anytime I open my message or WhatsApp message, I will see so many of that person message full my WhatsApp message. So maybe he's trying to know something that I know. Yes, I know. That's why I always give time for that person to just decide. I will just say, okay, the question you ask is not something I can type. Let's just have a session. Let's just have a private class. Then I will explain everything. And it happen like that most of the time. So, and those of you who are okay, by next week we still continue the private class. We still continue. So the next group of people we still continue with them. And we still continue with them. So maybe by upper next week I will start with one of forex private class. Okay. So it's just like when you go through the market during the week and you still don't understand something, what I know, what exactly I know, and you still don't understand it. That's why I decided that let me give you guys private class. So when you are trading, don't trade anyhow. Trade like a business. It helps a lot. Okay, okay, guys. See you next week. I hope you I hope you enjoy the lesson of today. See you next week. Have a nice day. Bye bye.